If I could have everyone settle down, we're going to go ahead and get started and introduce our next presenter. I do want to tell you something. I made a faux pas in my presentation. I made a boo-boo, I made a mistake, and I apologize. And the mistake is this. When I was talking about being able to purchase active duty wartime military service under the wartime military service provisions, I told you in order to be eligible to buy service under that provision that you had to be initially enrolled in the FRS prior to January 1st, 1974. And that was the mistake. Okay, the actual date is you had to be initially enrolled in the FRS prior to January 1st, 1987. And for some reason, I had a little skip in my brain and I said 74, but it is January 1st, 1987. You had to be enrolled in the FRS prior to that date in order to be eligible to buy your active duty wartime military service under the active duty wartime military service provisions. So with that said, I appreciate all of you coming back from lunch earlier. We're going to go ahead and introduce our next presenter that everybody's anxiously awaiting to hear from Debbie Shoup, who's the Manager of Member Services at DSGI. Okay, so I'll turn it over to you. Thank you.
Good afternoon, everybody. I see some people out here from DMS. You guys think you're going to retire? See them sitting back there? Shame on you. Well, I'm very jealous of everybody out in the crowd. I wish I was going with you. I'm ready to retire too. My husband told me I could do an early retirement if I won the lottery, so I've been playing and just not winning. So I think I might give up on that before I go broke. So again, my name is Debbie Shoup. I'm a Manager of Member Services with Division of State Group Insurance. We oversee all the benefits for state employees and retirees. So all of you are here today to learn about how your benefits follow you into retirement. So some of the things that we're going to talk about are the health and life and how those follow you into retirement, what you can do with your supplemental plans that you may have right now, and then what happens with your flexible spending account. We're also going to talk about what happens when you become Medicare eligible, which is usually at 65 unless there's a disability. We're going to talk about that, how it affects your health insurance. And we're going to talk about premiums, which nobody likes that part, but is fact of life. So once you retire, now I know most of the morning you guys have been talking about getting ready for your retirement like 6 months before you get ready to retire. So when we talk about benefits, your health and life, we're talking about retirement when you've left your employment. So you work one day, the next day you're retired. That's when we see you as a retiree, because you're going to carry employee benefits up until that first day of retirement. Then you become a retiree under our program, okay? So when you retire, if you're in the regular pension plan, then your HR office is going to do a PAR, personal action in the People First system, that will say you've retired. The system will look at that, and if you are enrolled in benefits, then it goes ahead and auto enrolls you in the health and life, in which we'll talk about that more in a little bit. If you are in the pension plan, that works a little bit different. Is anybody out here in the pension plan, or is everybody? Okay, so we do have a few that are in the pension plan. IP, excuse me, investment plan. Sorry about that. Is there anybody? Yes, ma'am. Is that better? Okay, sorry about that. I always have a problem with audio. It never fails. Better? Okay. So those in the investment plan are handled a little bit different. I'm going in and out now. There? Okay, how's that? All right. So those in the investment plan are handled a little bit different than those in the regular pension plan. So instead of auto-enrolling, then you have to bridge your coverage with COBRA, and we're going to talk about that more in a little bit. So, excuse me. When you retire and the action is entered into the People First system, you will be sent a new retiree packet and a COBRA packet. You can continue the health and life for the rest of your life, and then the dental and vision, you can COBRA. You can also COBRA Health too if for some reason you want to and don't want to stay enrolled under the program as a retiree. And you can also visit the My Benefits website right now if you want to get an idea what that new retiree packet looks like. You can go to the resources section under other publications, and it's titled the State Group Insurance Benefits Package for New Retirees. So as I said, you can continue your health and life insurance coverage for a lifetime through the program as long as you meet these 4 requirements. You have to be enrolled at the time of retirement, and you also have to meet vesting requirements for eligibility pursuant to 121.021. I'm assuming most everybody here has met vesting requirements or you wouldn't be here. And then you have to elect to continue your coverage through People First, and then you have to pay a monthly premium. On the premiums, right now you're paying an employee portion, which is pretty low. Depending on if you're in individual coverage, you could be paying $8.34 a month or $50 a month, so you're paying pretty small premium. Right now your employer is paying about 90% of your premium. So when you retire, you have to pay that employee plus the employer premium. So it's a lot compared to what you're paying right now. We have 2 different plan types. We have 4. We have the PPO, which is administered by Florida Blue, and then we have the HMO, and for this area is Capital Health Plan. I'm sure most of you are familiar with our plan types since you hopefully are covered right now and have been covered for a while. The PPO is a good plan to be in if you plan to travel a lot while you're retired, or if you're going to move out of Florida, then of course you would need to go into the PPO. The PPO does have a deductible and the co-insurance and co-payments. It's got a nationwide network. Actually, it's got a worldwide network. It's got a network. If you go to Japan, they've got doctors there that are within the network. You have that out-of-network benefit, so if you do see a doctor out of network, then Florida Blue does pay a portion of that. And then you can see any specialist without a referral. For the HMO, and again, for this area's Capital Health Plan, and there are various HMOs throughout the state depending on what section of the state you're in, what county, because the HMOs do cover counties. We have Aetna, AvMed, and United Health, and they cover the various counties. So with the HMO, you have the co-payments, you don't have the deductible. You have the limited network. You pretty much have to see doctors within that area. I know some of the HMOs do have a network that allows you to see doctors outside of Florida, but you would have to check with that HMO if you got into one of those other counties. And then you have to have a referral to see most specialists. On the PPO, the deductible right now is $250 for individual and $500 for family. And again, that deductible you don't see under the HMO. The other 2 plan types, we have the standard PPO HMO, and then we have the high deductible PPO HMO. The high deductible is the same cover benefit, but you have a higher deductible to meet. Right now the deductible is $1,300 for individual and $2,600 for family. And that deductible includes your RX and of course your doctors. and this deductible has to be met before certain preventive services are covered. And then the high deductible plan has an HSA with it, but once you retire, there's limitations on what you can do with the HSA, especially when you become eligible for Medicare. So be careful on that if you get into the high deductible. The high deductible does have a lower premium than the standard plan. Yes? Yes, you can make changes during open enrollment. You'll still have that option just like you do as an employee, as a retiree. You can do that. And then if you are in an HMO and you move out of the HMO service area, then you can change to the PPO or to another HMO for that area. Yes? Mm-hmm. No, as a retiree, you can go down in coverage at any time, so you can move from family to individual at any time. If you want to move from individual back up to family, then you have to do that during open enrollment, or if you have a qualifying status change event, like if you got married, then that would give you the option to add your new spouse and then go back into family. So just remember, anytime you can lower, but to go back up, you have to have OE or an event. Okay, our plan tiers. We have early retirees, which is somebody that is not eligible for Medicare A and B. Then we have a single. These are the early retiree. We have a single, which is retiree only, and then we have the family, which is family plan, the retiree plus spouse or children, whoever they have covered. Then we have Medicare tiers. Medicare tiers kick in when you become eligible for Medicare. As I said, that usually happens at 65. So I'm going to say this several times through this presentation. When you become eligible for Medicare, make sure you enroll in Medicare. And you're going to find out why later in the presentation. So we have 3 different Medicare tiers. Medicare 1 is a single plan. That's the retiree only. A Medicare 3 is the family plan, which includes 2 people, and both of them are eligible for Medicare. This is kind of backwards. And then Medicare 2, I think they should have it numbered the other way around, but Medicare 2 is a family plan, and that's where you have 2 or more people and at least one of them are eligible for Medicare. So if you had just you and your spouse and one of you were eligible for Medicare, the other one wasn't, then you would go into a family plan. And then you would move to the Medicare 3 tier once that other one became eligible for Medicare. This is the fun part everybody's been waiting for. These are the insurance premiums that you're going to pay monthly. They're pretty high when you are an early retiree, and that's what you're going to pay before you turn 65. Single coverage under the standard PPO and HMO is $692.84, and if you go into the high deductible plan, it would be, for single coverage, would be $616.18. For family plan, it's $1,559.60, and the high deductible plan is $1,360.57. So once you turn 65 and you can move into the Medicare tiers, it gets a lot cheaper. And the reason why it gets cheaper is because Medicare becomes your primary coverage and our plan becomes your secondary. So your premiums drop quite a bit. As you can see, the Medicare 1 tier, which is the single, and you're eligible for Medicare with the PPO and HMOs, and that would be HMOs outside of this area. You're going to pay $388.38, and the high deductible is $292.76. Capital Health Plan is a little bit lower, and it's $282.62 for the standard, and then $257.23 for the high deductible plan. Then we're going to move over to Medicare 3. Did you have a question? So now, say the first part again. Uh-huh. If you want to stay with CHP, and then you won't do anything through open enrollment. And then when you retire, you'll just go ahead and stay with CHP. You won't move. So is your husband a state employee, and he's not going to retire? Okay, and we'll get to that in a minute, but we can go ahead and talk about it now. So if you are retiring and your spouse is a state employee or an employee of a state university that is under our program, then you can go ahead and move under them, which is much cheaper when you retire, because that will give you the option. That'll give you basically an event to where you can move under your spouse. Yes? Now, as I said, when you walk out the door, so your last day of employment, first day of retirement, that's what we're talking about, retirement for this program. For drop, still working, because you're still working. You're paying an employee premium, so it's when you're out the door. Yes? Right, so as long as your spouse is covered under our program and you move under your spouse, your working spouse, then you're going to be continuously covered. So that when your spouse retires, you can either stay under him into the retirement coverage, or you can go back and get your own retirement plan. Or if something happened and you and your spouse divorced, then you would be able to move under retirement coverage for you individually. So as long as you, now if your spouse works for a county, which FRS plan, but not under our program, and you move out and stay covered under him, you're not going to be able to get back in the program, because once you leave it, you can't get back in. So make sure that if you want to do that, if your spouse remains working and you want to move under their coverage, make sure that they're employed with an employer that's under our program. Yes, ma'am. So no, if you're still working and you turn 65, then you want to get hold of Medicare and tell them that you want to defer your enrollment because you're still actively employed. And that's the same if you're covered under your spouse's plan who is still an employee, then you need to defer the Medicare because you're covered under an employee plan. Yeah, because they're covered under a plan that is going to be their primary. I mean, you can still enroll in Medicare and still get that coverage, but it is going to be like a secondary, and it may pay for some things like a copay. Sometimes you have to pay the copay, sometimes you don't, or sometimes you may pay $20 of the copay and Medicare picks up the rest. So that would be up to you. But remember, when you enroll in B, A is free, but B you're going to pay a premium for, which I believe is around $115. So you'll pay that premium plus the premium for our coverage. And then on the Medicare tiers, that's for when you turn age 65. Now, if for some reason you become disabled, then of course, through that disability, then you would become eligible for Medicare. In some instances with a disability, you are not eligible for Medicare right away. It may be a couple years later before you become eligible for Medicare, but as soon as you become eligible, you need to enroll in it. You stay under our plan, and then you would go into one of the Medicare tiers too. And when you turn 65 too, if you're paying the early retiree premium, you turn 65, the system will automatically change you into one of the Medicare tiers depending on if you have individual coverage or family coverage, and then the age of your family members. So we'll auto enroll you into one of the Medicare tiers. Have any questions? Yes. No, you would move. So when you retire, you want to make sure if he's not enrolled in Medicare, you want to make sure that you get him enrolled in Medicare, and you would move into the Medicare 2 tier because we've got one eligible and one not. What would happen in the Medicare 2 tier, those that are eligible for Medicare, Medicare becomes their primary, and this plan is the secondary. The person that is not Medicare eligible, the plan is their primary. And basically, it's just like the coverage that you have right now. It's the same as being an employee. Any more questions? Okay. So here's a little bit more on Medicare. We talked about some of this already. Part A is the hospitalization coverage, and that is free. You're auto-enrolled in that. Part B covers the medical services and some prescription drugs. And as I said earlier, there is a monthly premium for that. Most people get that deducted from their Social Security. And as I said, I believe it's about $115 for that monthly premium. Part B covers things such as doctor visits, x-rays, labs, services of that nature. And then we have Part D, which is the prescription drug plan. If you stay enrolled in our coverage, do not go out and get a Part D. A lot of people, especially during open enrollment when they have all these companies calling you, a lot of people wind up getting enrolled in Part D and they don't even realize it. If you enroll in Part D, it's going to mess with your drug coverage under our plan, because our plan is going to get notice from CMS, which is the folks that oversee Medicare, telling us that you've enrolled in a Part D plan. So that plan becomes your primary, and then you can't get drugs through us. So make sure that you, as long as you're under our program, don't get Part D. Okay? Yeah, right. D as in dog. In our plan, our drug plan is considered credible coverage. And I know that if for some reason you got out of the program and you wound up needing to enroll in Part D, then you have to show proof that you've had credible coverage. So there is a certificate, a notice of credible coverage that goes out to you. It's on our website. It's in the OE packet this year. So it just lets you know that it's comparable or better than Part D coverage. About 3 months before you turn 65, you're going to start getting bombarded with letters telling you you're fixing to turn 65 like you didn't know that. But, you know, sometimes we need to be reminded of those little things. But you will get them from Medicare and you will get them from People First. So when you start getting them, then you need to go ahead and start filling out the paperwork to get enrolled in Medicare, okay? Any questions? You guys are being easy on me so far. Okay, we talked about this too, the coordination with Medicare. So coordination means that there's more than one company that's involved in paying your claims. When you become 65, then Medicare becomes primary and our insurance becomes secondary. So Medicare is going to pay 80% of your claims, and then the secondary picks up the other 20%. So having said that, it's very important you enroll in Medicare, because even if you don't enroll, then we're only going to pay 20%. You're going to be stuck paying the 80% that Medicare would have paid had you enrolled. And that's true for your spouse, or if you have a dependent under you that is eligible for Medicare. So pay attention to those letters that you get when you're 65 or getting close to 65. Secondary insurance. A secondary insurance is a little bit better than a supplement. If you have a service that Medicare does not pay for, and it's a covered service under our plan, then our plan goes ahead and becomes primary for that service, and it pays for that service. A lot of secondary plans that you see out on the market do not do that. If Medicare doesn't pay for it, then they're not going to pay for it. So you're stuck paying that. That's why, as a secondary insurance, our premiums are a little bit higher, and plus the drug plan is included in that as well. So, which eats up quite a bit of it, actually, the drug coverage. Drugs are pretty expensive, so that's a big hunk of that premium that you pay once you get into Medicare. Yes, ma'am? No, as long as you are still working, you're employed, you do not need to enroll in Medicare unless you want to. You call up Medicare, tell them that you're still employed, and that you want to defer your Medicare enrollment until you retire. Yes, when you actually retire, walk out the door, then you can go ahead and apply for Medicare at that time. Okay? Yes? To a Medicare tier? So, yeah, once you go into the Medicare tier, then our plan becomes a secondary, and Medicare is primary. Medicare is your primary, and then this is secondary. Yes. It's nice and confusing. It took me a few years to learn this, and sometimes I wonder if I even have it down. So hopefully they don't change any of this, because I'll be in trouble if they do. Any more questions? Yes. Yes. Yes, you just need the Medicare A and B, and then you need ours as a secondary, so that your out-of-pocket expenses are going to be limited. Okay. Any other questions? Yep. Okay. Okay, Medicare Advantage Plan. So if you are in CHP and you stay enrolled in CHP when you turn 65, then you will go into a Medicare Advantage Plan. Right now we have 2 HMOs that have a Medicare Advantage Plan, which is Capital Health Plan, and we had Florida Healthcare plans as well. In 2018, Florida Healthcare plans will not be an option they will no longer be a provider in 2018. So if you stay in Capital Health Plan, then when you turn 65, you become Medicare eligible. To stay with CHP, you most definitely have to have Medicare A and B, and then you have to enroll in the Medicare Advantage plan. Now, I'm told by CHP that sometimes this enrollment is automatic and sometimes it's not. I'm not sure exactly what makes it automatic. I know that they need certain information. They need a copy of your Medicare card in order to enroll you in the plan. So you will receive notice from them, though, if you need to fill out the application. It will come to you in the mail. You need to make sure and do that, because if you don't fill out that application and get enrolled in the Medicare Advantage plan, then you can't stay in CHP. We'll have to move you over to the PPO. So make sure you do that. In the Advantage plan, you still have the medical coverage and the prescription drug coverage. You do not get your prescription drugs from Caremark like you do right now, or like anybody else under the plan does. It's just in the Advantage plan, you get those drugs from another company. I think they've changed recently, so I'm not exactly sure who they are, but you would not get them through Caremark. Yes, ma'am. No, it's not a supplement. I mean, it is. It's like an Advantage. They have Advantage plans that are out on the market that you can get into. You still have to have your Medicare. It works with Medicare, but it's got the drug plan with it, where a lot of supplements don't. A lot of supplements you have to go out there and get the drug plan as well, Part D. So this has the drug plan in it as well. If you're retired, right? If you're an employee, again, that's not going to happen. And you need to make sure and enroll in Medicare. If you don't enroll in Medicare when you're eligible, then you can be penalized, and then you may not be able to enroll until several months later. They don't do retroactive enrollment. So I'm going to keep pounding that into your heads, because there's a lot you would be surprised how many people don't actually enroll in Medicare. And then they are not happy when they have to pay a huge chunk of their medical bills. There's the Medicare Advantage plan is a plan that has to comply with a lot of federal laws. So CHP has to comply with these laws on how they manage the plan. So the application that I talked about, federal law requires that you do that, and that CHP has that. So if they can't auto-enroll you, then you need to fill out the application. Again, if you don't fill out the application, then we have to move you into the PPO so that you do have coverage. And the PPO in the Medicare tiers is more expensive than CHP. Okay? Yes, ma'am. Yes, ma'am. Last I heard, it was around 115. I'm not sure right now. So yeah, you get the health insurance subsidy, which is a retirement benefit. I think you guys talked about that earlier. I do have a slide in here about that, but that is added to your benefit. And I think you can get up to a max of 150, and depending on how many years you worked, and I think it's $5 a year. Then you do get that for health insurance coverage. You can have any health insurance coverage. You do not have to be insured under our program. You could just have Medicare, and you would still get that. Any other questions? Okay. And more about Medicare. So as we discussed earlier, the premiums automatically decrease at age 65, even if you don't enroll in Medicare, but you want to make sure that you do. When you do become 65, you get enrolled in Medicare, you want to make sure and send a copy of your Medicare card to People First. They will put that into your record that they have your card, and they will have that card number. And while I'm talking about that, we just got notice the other day that Medicare is going to change their process of putting Social Security numbers on Medicare cards. They're going to assign you another number. So you won't see that Social Security number on the card anymore. That'll be fun for us because that's how our system runs, is on Social Security number. So it's going to be interesting to map that new number to our person. So that'll be fun when that comes along. As we talked about earlier too, if you don't enroll in Medicare when you're eligible, then you're going to possibly be penalized for that. You could pay more in premiums, or you could have high out-of-pocket claim costs. Of course, if you don't enroll in Medicare, then you're going to be stuck with paying that 80% that Medicare would have paid had you enrolled. Yes, ma'am. Yeah, you have to enroll in it. Yes, you have to take an active part and enroll in it. You are not auto-enrolled in B like you are A, because you have to pay a premium. Most people don't pay a premium for A. I saw a couple of months ago, for the first time in my 5 years that I've been doing this, somebody actually had to pay a premium for A, and it was high. It was very high. I was a little shocked, and it was because they didn't have enough years worked. So that can happen. Yes. Yes. Mm-hmm. So there's going to be a form that you get from Medicare that DSGI will fill out that shows that you or the employee have been employed, and that will allow her to enroll in Medicare. I can't, right off the top of my head, I can't recall what that form is, but it's for DSGI to fill out that shows that you were employed and that you had coverage and that your spouse was covered as well. So that's how they know that she was under active employee coverage. Any other questions? Okay, as I talked about earlier, one other way that you're eligible for Medicare is through disability. Hopefully that doesn't happen to anybody in the audience, but if it does and you get on social, I'm having problems with that word today, Social Security disability, then you could become eligible for Medicare as well. And you would be treated the same way as someone turning 65, so you would want to make sure and enroll in the Medicare if it's due to a disability. And of course, if you do become disabled and enroll in Medicare, you want to make sure and send a copy of your Medicare card to People First as well. Okay? Okay, we talked a little bit about this. For pension plan members, upon your retirement, if you're enrolled at the time of retirement, then you are auto-enrolled into coverage, which is automatic. If you don't want that coverage, if you just decided that it's too much and you want to go find coverage elsewhere, go ahead and call People First and let them know that you do not want that coverage so they can go ahead and cancel you. And just keep in mind, though, if you get out of the program, you can't get back in. You could stay in the program with life insurance, but if you get out of the health, you still can't get back in. It's once you drop that coverage, that's it. Okay? right now, as an employee, you pay your premiums a month in advance. So we're in October right now, we're paying November premiums. You kind of want to treat your retirement, or when you're retired, you want to treat your retiree premiums the same way. You want to try to send them in the month before the coverage month. Because if you wait and your payment for some reason doesn't get there by the first of the month, just like now, your coverage is going to be suspended. So you can't use that coverage. If you try to go to the doctor, try to go get a prescription, they're going to tell you that your coverage is terminated, which it isn't terminated, but it's suspended until we get that payment. So as soon as we get the payment, it unsuspends and becomes active again. So you want to make sure and get your premiums in timely. And you can also, as a retiree, and if you've got enough money in your pension, get your premiums deducted from your pension. And you'll set that up with People First. The first payment that you make for your retiree insurance, you have to do by check. And then after that one, and you want the pension deduction, then they'll kick in the second month, and you don't have to worry about that. If you do pick that, you have to watch every year. Premiums tend to increase. So you need to make sure when they increase that you have enough in your pension to pay those premiums. Otherwise, if you don't, then we can't do that pension deduction, and you'll have to pay directly. If you're an investment plan member and you want to continue coverage under our program, since you are not considered a retiree under our program until you take a distribution, then you have to bridge that gap between leaving work and taking that distribution, which sometimes could be 2 or 3 months. So the way you bridge that gap so you have continuous coverage under our plan is to COBRA. COBRA is the full premium, and that was the early retiree premium back on that chart, plus 2%. So you would pay that COBRA premium until you took your distribution. Once somebody takes the distribution, there's a file that's sent over to People First. People First runs it through the system, and it calculates to look at how old you are, how many years of service that you had, to see if you're eligible to continue under the program. And then if you are, then it goes ahead and creates a retiree record for you. And then you can go ahead and move into retiree coverage. And then after that, you're treated the same. Medicare, everything is the same. Any questions? Okay. So the options upon retirement with your health insurance. As we talked about earlier, you can reduce your coverage from family to individual at any time. To move it back up from individual to family, you have to do it during open enrollment or a qualifying status change event. If you cancel your coverage, you cannot re-enroll, so make sure that you do want to cancel your coverage before you do it. If you cancel and come back a couple months later and say, oh, I just didn't find anything comparable, or I don't like what I have, I want to get back on, it's not going to happen. You're not going to be able to do it. So make sure you know what you're doing if you cancel it. If you're enrolled in an HMO and you move out of that service area, then you can change either to the PPO, or if you stay in Florida, then you can change to the HMO for whatever county that you moved into. And of course, if you move out of state, then you would change to the PPO. And you can also, as we talked about earlier, move under your spouse's coverage if they remain an employee. And we talked a little bit, we touched on this, for your spouse's coverage. If they are an employee, make sure that they are an employee under our program. Again, we cover state agencies, state universities, and there's a few other little entities that we cover, like Tri-Rail. I believe we have 56 employers under our program, which is unlike the retirement system. They cover counties, school boards, all sorts of different entities that we don't. So make sure that it's under the program if you move under your spouse. Any questions? Okay. Surviving spouse benefit. If something happens to you and your spouse is covered under you in our program, then they can enroll in surviving spouse benefits. And they can stay enrolled in the surviving spouse coverage as long as they don't remarry. So the state wants everybody to live in sin. They don't want you to remarry because once you do, coverage is terminated, okay? On this slide, it says submits enrollment application and death certificate to People First within 60 days. For the surviving spouse, it says 31 days. You actually have 60 days to enroll in surviving spouse coverage. That was just recently changed. So if you'll mark that off and have it say 60 days instead. And you do have to, if you wait that full 60 days before that surviving spouse enrolls, they're going to have to make up those 2 months of premiums that they miss, because we can't have a gap in coverage. It has to be continuous coverage. So if you wait, or if they wait, then they could wind up paying 2 or 3 months premium at one time. So it could get a little expensive. But it is out there. And then, of course, the surviving spouse can have dependents. So if they have any children or any dependents other than a spouse, then they can cover them under coverage as well. And the coverage is the same. It would apply to the surviving spouse just like it does the retiree. The premiums are the same and the Medicare tiers are the same. Any questions? Okay, we talked about this, the health insurance subsidy. As I said, you don't have to be covered under our program to get the subsidy. You can just be Medicare or some other insurance as long as you're covered. As I said, this is a retirement benefit. If you do stay under our program, there is a certification for continuing health coverage, and People First can fill that out for you to certify that you have coverage under our program. Yes? Excuse me? So my understanding is you have your pension, and then the health insurance subsidy is added to that, and then if you're doing a pension deduction for your premium, then your premium is deducted. Richard, they're entitled to the HIS even if they stay enrolled under their employee spouse. They still get that, right?
That's correct. If you are going to, the main thing is that you certify to us that you have health insurance coverage after you terminate your employment. It doesn't matter if your husband or your wife works for the state or for some other employer that provides health insurance coverage. If you have health insurance coverage through your spouse's employer, that still makes you eligible to get the health insurance coverage. Does that answer your question?
And you would still send that certification to People First? Yes, ma'am.
Okay, if both the husband and wife work for the state, and they both retire and terminate their employment, they're both entitled to get the health insurance subsidy benefit on their own.
Any other questions? Okay. So when you retire, you can continue life under the program. There are 2 different options. We have the $10,000 policy, which is $19.33 per month, and we have the $2,500 policy, which is $4.83 per month. When you retire, and if you were enrolled in Basic Life as an employee, and most of you are because the employer pays for that, then you will auto-enroll into Retiree Life, the $2,500 policy. If you want to move into the $10,000 policy, then upon retirement, you need to call people first and let them know that you want to move into that $10,000 policy. No. Nope, you can keep it as long as we have it and as long as you're alive. Okay? Any other questions? Oh, I forgot to mention something very important. As with health, life, if you cancel it or if you don't elect it to stay enrolled in it when you retire, then you can't get back into it later. Same thing applies. There are some benefits of these life plans. We have an accelerated death benefit. As employees, we have this benefit as well. So if you're diagnosed with a terminal illness, then you can go ahead and you meet the requirements and it's certified that you have a terminal illness, then Securian goes ahead and pays you that full benefit. So that carries into the retiree coverage as well. If you're out traveling and you pass away while you're traveling and you're more than 75 miles away from home, then Securian will pay up to $5,000 to get your body back to your hometown. So that's another benefit of the life insurance. There also are some conversion privileges for the life insurance plans. You would actually need to talk to Securian to find out what those are if you're interested. Securian's number is on this slide if you want to give them a call to find out about the conversion privileges. I want to remind you, as employees and retirees, you always want to make sure to keep your beneficiary updated. If your beneficiary is not updated and something were to happen to you, then there is a certain way that your benefits will be paid out. May not be to who you want it to be paid out to. First person that it pays out to would be your spouse. So if you and your spouse are not getting along or separated and then something happens to you and you didn't change your beneficiary form or update it, then your spouse is going to get that money. The next is children, then parents, then siblings, and then your estate. So it's in your best interest and everybody else's to keep that beneficiary form updated. You can do that online through Securian too. It's not a hard process. If you become disabled and you are enrolled in the life insurance, and this is while you're working for the state and you become disabled before age 65, then you can actually get a waiver for the life insurance premium while you're disabled, and you must do that while you're still employed. So if you become disabled while employed, call Securian about getting the life insurance waiver. 60, sorry, I've got 65 on my noggin. Yes? So we have Basic Life that the state pays right now as an employee, and then the retiree coverage is the Basic Life. Are you talking about the waiver? It's a basic life policy. Well, no, the one the state pays for as an employee is actually a $25,000 policy. So a retiree is a $2,500 policy or a $10,000 policy, and you would pay that as a retiree. Correct. The state does, right. Well, no, you have the 25,000 as an employee. You don't have the once you retire, that $25,000 basic life goes away. So you have the option of having a $2,500 policy or a $10,000 policy, and you're going to pay for it. Okay, for dental and vision, you can continue those through COBRA, and you will receive a COBRA packet. You can continue those up through 18 months. We do not have a retiree option to continue as a lifetime benefit for dental and vision. It's just that 18 months through COBRA that you can continue that. And then you would pay whatever the monthly premium is for whatever plan you pick plus 2%. You always add on that 2% for COBRA premium. There are some dental companies that will allow you to convert to an individual policy. So if you are interested in that, give the dental company a call and see if you can do that. Some do and some don't. And again, with the COBRA, once you enroll into it, you can't cancel it during the 18-month period. If you do cancel it, you can't get back into it. Any questions? Okay, I think we've talked about this quite a few times already. You can reduce your coverage at any time as a retiree. If for any reason you cancel, and that could be because you called and canceled or because you didn't pay your premium timely, then your coverage will be canceled and you can't get back in. So if you do not get your premium payment in by the end of the coverage month and you move into the first of the next month and that premium is not there, your coverage is going to be canceled. So you need to make sure that your premium gets in timely. Because we are the big bad insurance company and we want your money. Okay? Paying your monthly premiums, we talked about this. Best policy is that you pay your premium 1 month in advance. So if you are going to pay November's coverage, you would want to send it in by October 10th. You want to look at the 10th as the day to get your premium in for the next month. Then you don't have to worry about your coverage suspending or possibly getting canceled because your premium didn't get there on time. Of course, if you are being pension deducted, you don't have to worry about that. That will come out of your pension pay, and retirement will pull that for us, and it's all taken care of. You don't have to worry about it. Well, I should say in most cases you don't have to worry about it. Crazy things happen, so I can't say, it's 100%, but that's the way it's supposed to work. Any questions? A lot of people have other supplemental plans as employees. This could be the accident plans that we offer: cancer, disability, hospitalization. You cannot cover any of those plans. We do not offer any of those plans to retirees, but some may offer conversion privileges. So you would want to call the insurance company. And also you want to check if you do want to convert, or even now you need to check your policy because some of those policies do have age limitations. So you want to look into that if you're thinking about trying to keep those plans through an individual policy. Flexible spending account, healthcare. Is anybody enrolled in a healthcare account right now? Healthcare FSA? Okay. When you retire, you'll want to talk to your human resource office about continuing your healthcare FSA if you want to. You can continue it through the end of the plan year. Of course, you have to pay those monthly contributions because they're not going to pull out of your paycheck anymore. But you would be able to use that account for the remainder of the plan year. You can also pay those contributions through a leave payout. if you want to, or not. If you don't want to continue it, then you would be able to use those benefits up until your last pay warrant. So you could get services up until your last pay warrant and be able to submit those for reimbursement. So if you have a lot of money, you may want to go ahead and think about using that money up before you retire. Or if the money left to retire, then you may want to think about continuing it and making those monthly contributions. You kind of you lose the tax benefit of the FSA if you're paying those contributions, but at least you get to use up the money that you've already put in before your retirement. Any questions? Okay. The Benny card, if you have the health care FSA, then you are hopefully familiar with Benny. He's a great little guy. He's a little red card that makes it so easy to go to the pharmacy. When you have the health care FSA, you get the Benny card, debit card to use when you need to access that account. So once you leave employment, then that card is deactivated and you won't be able to use it anymore. And then two, if you retire and you've used that card before you retired and Charge Snyder sent a request to you for documentation to substantiate a claim, you want to make sure and go ahead and get that cleaned up and give them the documentation that they need, because if they don't get it at a certain time every year, we send people over to collections or will garnish wages to get that money back, because the IRS says that you spend that money on certain things, and if we can't substantiate that claim based on what we have in the system, then we have to ask you for documentation. And if we don't get it, then you have to pay that money back into the account. And that's all federal law. The IRS says that. So you want to make sure and get in documentation if it's ever asked of you for your FSA. Any questions on that? And the dependent care, of course, would end the same way on your last payroll deduction. You would be able to submit any claims up until that point for any eligible dependents that you may have. Health savings account, if you're enrolled in a high deductible plan, then pretty good chance that you have a health savings account right now. Your state contributions will end upon retirement. And then the funds that you still have in your account, of course, can still be used for any eligible expenses, even your Medicare premiums. Just remember that you will not get any state contributions once you retire. And we are to the end of my presentation. Here's some contact information. I had every intention of going out and finding a Medicare contact number for y'all. Last time I was here, somebody requested that and I didn't do it. I apologize. Hopefully I'll get that added. But if you Google Medicare, there's contact information out there all over the place. There are Medicare guides out there as well. So Google's just a wonderful tool. I think Google's my favorite friend. But one thing I wanted to talk to you guys about before the presentation started, I was told that somebody had asked about making wills and stuff. I believe that our employee assistance program offers some of those services. So if you're interested in wills or other legal matters, you can contact EAP. And you can get that contact information by logging into People First and then clicking on that EAP button in People First and call them and see what kind of services you can get through that program. One more thing before I go, I'm going to remind you guys that open enrollment is coming up. Pay attention, and you need to do this as a retiree too. Pay attention. Every October we start sending out OE packets, open enrollment packets, that has your annual benefit statement in it and has an insert that tells you what's going to happen for the next plan year. There are a lot of changes for 2018, so you guys need to pay attention to what's going on. We're losing some of our dental plans. There's like 4 plans that we're going to lose. If you're in one of those plans, you're going to actively have to enroll in another plan. If you don't go take that action, you're not going to have a dental plan for 2018. I don't know when most of you plan on retiring, but if you're going to be an employee into 2018, you really need to pay attention to what's going on. Employees, retirees alike, we're going to be doing a 100% audit of dependents. You will be getting letters from a company called HMS that will request documentation to verify your dependent's eligibility. If you don't respond to that, you run the risk of having your dependent termed from coverage. So there's a lot of things going on that y'all need to be paying attention to, and that's going to be the next 3 years. We've got a lot of big things due to some of the legislation that was passed this last session that there's going to be a lot of changes to benefits. So just keep your eye open for changes for these next few years. Yes, ma'am. I don't know. That was passed this year. I think it depends on what kind of, what they see come out of it. If they do find a lot of ineligible dependents, then I can imagine. I don't think it would be an annual thing. At DSGI, we are doing it constantly, but on a much smaller scale. We're looking at 10 to 20% of QSC events every month. So we're looking at anywhere like 150 people a month and verifying those. And then once everybody gets verified, it gets checked in the system that that dependent has been verified so that they won't go through another audit. Are we out of time or do we have more questions? Okay. Do we have any more questions? Or if you have something you want to ask me privately, then you can catch me afterwards. Yes, ma'am.